Hey everybody, welcome to the Chinchilla Pickin' Podcast. It is August 9th, 2021. Happy Monday. We hope to be entertaining, education, uplifting, because we want everyone to make money. Brandon, how are you doing, man?
Good.
Yeah, are you having fun with your tongue twisters there today to warm your voice up?
Yeah, my Alan Jackson figurine I have on my desk now.
I see that. It's taking up your whole screen right now. Did you get that because you're a Red Dead fan? Is that why you have that?
No, I have it because I like Alan Jackson.
Oh, okay. Yeah. I didn't know. It looked like he's a Red Dead character to me. Yeah.
He should be. He's way down the under on the Chattahoochee.
Yeah, if you guys want to know what we were talking about right before we started the show, if you go and Google the latest picture of Fred Durst from Lollapalooza, it is quite the transformation from him in the late 90s, early 2000s. So, yeah, I was surprised at the picture.
Similar to the Unabomber.
I guess you could say, you could say that.
It's a cross between Fred Durst, the Unabomber, and Son of Sam.
All right. Fair enough. All right, guys, let's go over the rules. The rules are Brandon and I get together about 10 to 15 minutes before the show, and we tell each other what we're going to talk about, but we do not talk about it. Brandon has already forgot what I told him, so he has no idea what I'm about to talk about. I get to go
Where
first.
am I?
Those are the rules. Here we go, Brandon. So, first thing I want to talk about was how last week I was on here and I was saying how I might be turning into a bear for once. I was so pessimistic. The last GDP numbers weren't good. Nothing was looking good. We weren't heading the jobs we need. And then they come out with that jobs report, and it beat expectations. And I was surprised. I might be turning the corner here, coming back to bull territory about the economy. I might. And the reason I'm hesitant is because we still we're not filling the jobs we have. There's still a need out there, and that's going to hit home sooner or later.
Does being bullish on the economy translate into you being bullish on American equities?
It depends. Are we talking day trade? Are we talking swing trade? Are we talking investments?
I'm just talking about, in general, S&P 500, SPY, NASDAQ, QQQ. Do you think American equities are headed higher?
If we're talking swing trade and that's short-term, guys. I define swing trade as anything between 2 and 6 weeks. And if we're talking that time frame, I would say, yeah, sure, why not?
And you could swing trade or day trade and be short and still make money on the money going, on the market going down. But
the reason why I don't make that affect my day trades is because day trades, I'm in and out so fast. It doesn't matter if we're in a bear market, bull market. You can in and out so quickly. You just make your money and go. But if you're looking for investments or swing trades, that's when it will have an effect.
Mm-hmm.
What's your thoughts on that job number that just got posted out there?
It makes me bullish on the economy. It makes me more neutral on stocks. And the reason why I say that is because that potentially quickens the pace as to when the Fed will stop quantitative easing, which will bring multiples down for U.S. equities.
Yeah, and that's exactly where I was going to go next, because last week, I was talking about how there was a Fed Treasury, I forget what region he was from, but I believe this is St. Louis Fed guy, and he came out on CNBC and was quoted as saying that if we hit our jobs numbers for the next 2 to 3 months, that he could definitely come out on record and say that we're going to cut back on some of the QE come October. Which is, I would love to see that.
Me too. But
like you said, it would put pressure on equities.
It is a political situation too. I think Chairman Powell I think his job ends in January. Now, if he cuts or if he increases interest rates and angers Joe Biden, he may not be reappointed. So will that play into his decision or not, because I think he's up for reappointment in January or February of next year.
Okay, already, huh?
Yeah, I believe.
Yeah, all those things take into effect whether or not someone's going to be reappointed, or maybe that he doesn't even want the job anymore and he's okay with walking away.
I wouldn't blame him.
To me, that's too much on my plate there. I wouldn't want that. Talking to a guy who works like 60 hours a week and does his podcast and does multiple things, I wouldn't want that job, no. But it's I don't know. It's tricky to guess what the Fed is actually going to do, and I'm not going to trade based on what I think they're going to do, right?
I create a base case sometimes that makes the most sense, but it doesn't affect it so much that, like, I'm going to base my entire portfolio on what I think the Fed's going to do, because I don't have a crystal ball in front of me and I can't see the future. But if there's something that makes common sense, or makes sense to me at least, then I might make a small bet on it.
Okay, and small as in, like, what are you looking at here? Like, again, are you doing day trade, swing trade, or investment?
So I bought Take-Two Interactive today, because I mean the gaming industry, it's been taking a hit for the past couple of weeks, and Take-Two Interactive is, I think, actually down now for the past 12 months. And I mentioned this a few episodes ago, I don't know, maybe it was a few months ago, that I'd always wanted to own Take-Two Interactive stock, and I never did because I thought it was too overvalued, and now I don't think that's the case. But I also don't believe that the Fed is going to really end quantitative easing until the contracts for the infrastructure bill is handed out. And as long as we have low interest rates, then I'm comfortable with my Take-Two Interactive position. And I love that company anyways, so.
Okay. All right.
It's trading at
I have no infrastructure plays. However, I say that, and one of the companies I've been bullish on, and they traded multiple times, is part of that infrastructure, you could say, play, if you will. You know, and I'm talking about BLNK.
Yes.
Charging. BLNK. It's BLNK is the ticker symbol. So on our Instagram, I put a story on there talking about how I would explain my thoughts on BLNK and Hood and how I day traded in this past week, what to look for to try and help people out, right?
Mm-hmm.
So let me transition from infrastructure into how I day traded BLNK and why I like BLNK for multiple reasons. We handle BLNK first, right?
Mm-hmm.
So BLNK charging, if you guys don't know, this has to do with electric vehicle charging. Mainly, I would say their major source of income right now. They're putting up a lot of these, would you call them towers or units? Call them, I guess, units.
Mm-hmm.
Electrical vehicle charging units up at different places, such as apartment complexes, workplaces, jobs, shopping centers, different places where they want to seem eco-friendly, and they want to put these up and say, hey, we got these spots here for those who need to charge. And BLNK charging is the one that's really going around doing majority of all these around the United States, and has multiple contracts in Germany and all over the world and global. It's a global company. It really is. And with the rise in EV, and with California going the way of EV, saying they're no longer going to create new vehicles by, was it 2035, that are not electronic. They're all going to be electronic in California. And with the current administration's pushes for EV and climate change and those aspects, I see this as a good play. I see a lot of strong growth in it over the next couple of years. And if you wanted a good investment, BLNK's a good investment. All right. Now, for day trading, what I saw when day trading has a couple different things. It has to do with the macroeconomics, emotions of the market, what's going on in the news, and also charts. I do somewhat look at some charts here, and I'm not talking to MACD lines. I know Brandon ranks at MACD. Where's the MACD at?
And the RSI.
The cloud is over here, and I'm not into that, man. I just want to see, has this taken a hit lately? Because it doesn't deserve to take a hit. So if the whole market as a whole has gone down recently, then and BLNK drops down to 31, 32 for no reason, like I can't find a news story or some earnings report, something to justify it. BLNK's a good buy. You buy it and you take the jump up. You make your day trade. You wait for the day trade on a day that the whole market's moving up because people are going to pile into the good value stocks, such as Blink. So you saw that this dropped. It didn't need a drop. You did your research. There was no news stories for it dropping. There were no earnings reports for it dropping, right? So it's on your radar. It's on your watch list now, right? You got your Robinhood watch list out. You're looking at it every day, checking it. Now the market is open. There's all kinds of good news. It's Goldilocks moment all around. Boom. Now's your time to buy Blink. Buy it. Mm-hmm. I guarantee on days like that, if you did your research correctly, finding the right opportunity, you're going to make 2 to 3%, if not more, on that stock for that day. And that is that's one of the ways I look for a day trade. Does that make sense?
It does make sense.
Okay.
Now, you talked about it being an infrastructure play. This infrastructure bill includes $7.5 billion for electric vehicle infrastructure. There's $2.5 billion of that's going to charging, and that's a lot for this industry. So I think Blink should get a piece of that, I would think.
It's taken a rise up. It's taken a big rise up. In fact, I'm going to brag about my daughter right now. She actually had bought Blink on Friday. She's 15, by the way, guys. She has one of those Fidelity minor accounts. So she can't buy international stocks and she can't buy penny stocks. She's very limited on what she could buy. But she bought Blink on Friday. And today she sold it for a nice steady return, So this is exactly what I'm talking about. Blink has taken a run up because of the infrastructure bill. People are using it as a play off of that. That's an opportunity to make some money on the run up. Now that it's already had its run up, though, now I would need some more news, some more events, some more, fundamental news as a reason to buy it because it already did its macro run up.
Yeah, and if you've already got the run up, then you might get a sell the news situation.
Exactly. Which is what it should be. You sell the news. Why do we buy the news anymore? Why is that a thing? You've always sold the news. You bought ahead of time, know what's going to happen, and you sold the news.
I don't know.
I don't know where that started from. Anyways.
I think it's recent. That's a recent thing. That's literally it's one of those post-COVID things that I've seen that there's been a few things, a few market irregularities that I've seen since post-COVID, and that's one of them.
Yeah, and I think it's all the new retail investors jumping into the scene, not really fully understanding how to make the right investments and guide these things ahead of time. So you can spot these stocks like, okay, that one's going to be a good one once the market jumps back up. Should I buy it now? It might go down a little bit more. That's okay if it drops 1% because no one ever calls the bottom exactly.
Right.
And so, you buy it before it takes the jump up, guys. You got to take that chance on it, but you got to do your research and make sure this is the stock that's overvalued in a lower cost position. Look for that value opportunity. And Blink was a value opportunity last week. I day traded it 3 times and made money. It was great. I love it. Another one that was day traded was Hood, right?
Right.
So here's what I was thinking in Hood. You ready? This one was a little bit more risky. All right. I was not as confident as 100% sure as I was in Blink. Yeah. Even though in my text messages I was like, yes, all in. That's how it came across. That is not how I felt. But Hood. It took that big jump up to what, $87, $90 a share, somewhere around there, wasn't it? I think it was somewhere around 85 to 90.
Yeah, close to that.
And it took that big jump up, and then it started coming back down, right? And the trend, and I was doing this off a trend. I was doing a day trade off a trend. The trend with Wall Street bets stocks is they all come back down off the high, and they do these little bounces, right? Because they're all trying to get back in and have it go back up to that 90 high again. Nothing's better than that first high of 90. They want to get back up there again. But it never really does. So when you see it drop down really stark right away, you get in and on these Wall Street bets ones lately, this is what I've been doing. And then it will jump up that, 2-3%. And I sell after around the 2% mark and I get out and I make my money. And I've done it multiple times and it's worked. Almost every time for me. It's very, very risky. It's very risky, but it has worked.
You just gave me an idea, and this would be risky too, but historically it seems to play out right. Like it hits that top, and then it never really goes back above that top again. But everybody's kind of expecting it to go there, so you might be able to
the moon, right?
You might be able to find a good spot where you can sell a call option at above that price for a good amount of money, or you could sell a credit spread, where you're betting that it's not going to break that top again. But if you're doing the spread, you need to make the money make sense. Like what you're risking versus what you're making needs to make sense, and you need to do the math. Like I always do if I'm doing a spread, if I make this trade 10 times, and say, for example, it's 80% profitability, right? Like you've got an 80% chance of making profit. If you make that trade 10 times, you win 8 out of 10 times. You just have to make sure that the 2 times that you would lose wouldn't wipe out all your profits. And if that's the case, then the trade can make sense. And you could make that. You could sell a credit spread at that top end, bet that the stock's not going to go back up above that level, and you should make a pretty good deal out of it if that's the expectations. This is just a fresh idea for me. Like I don't know why I hadn't thought about this earlier, but you bringing this up made me think about it on the spot. So,
yeah, it never goes back up to that initial ginormous high that hey, GameStop never went back up above 400. It's been hanging around the 100, 200 range. AMC, same thing. Hood, right now, I mean, it's completely overvalued. But it's going to stay over. That's been the trend. They stay overvalued. They never go back down to a correct valuation. And they stay right where they're at. And this is the trend of how things are, man.
Yeah, eventually they will. But it could, you can't predict the timing. But the good thing about selling those credit spreads at the top end is the fact that, like, you could just buy it back at any time you want. You don't have to wait for expiration. You just buy it back at, a better cost than what you sold it for. And then you pocket the difference.
Exactly.
So buy it back for lower than you sold it for, and then you make that money, and you don't have to wait till expiration unless you're playing the short date. If you're playing like this Friday or something like that, then you can maybe wait. But
that's even more risky.
Well, if you're doing it as a credit spread at the top end,
very risky. I don't do that. I have never done that.
But if you're buying a spread, time works against you if you're out of the money. If you're selling a spread, time works for you if you're out of the money. That's kind of the difference there, right? Like the less time you have, the more of an opportunity you have to make money. Because you don't have so much time to where that stock can, enter into your break-even zone or go past it and then you lose.
Yeah. I got you. And Brandon, I would like to challenge you. Can I challenge you right now, please?
Yeah, sure.
Can I challenge you to write an article on credit spreads and post it to the website?
I'll do it.
There you go. If you can do that, I would be appreciated.
For me, I like to play them sparingly, but they are a good way of pocketing premiums.
A lot of people just don't understand credit spreads.
Yeah.
It is what it is. All right, I have one last thing to mention here really quick. So, as everyone knows, we are in this competition, the Chinchilla Pickin', Brandon and David, versus the Money Viking podcast, one of our friendly rival podcasters. So far, right? Yeah. And in this competition, one of our friends, Mr. Mark Stinelli, he's been on the show, guys. He has put up money, and in his money, he has said we each get the same amount of money, and he will do whatever trades we tell him to do, and whoever at the end is the winner will get bragging rights forever and ever and ever. I'm going to go over this for last week. Chinchilla Pickin' did close to 6% just last week alone. The Money Vikings have not said a word about how they've done. We've heard crickets from them. I would like to call the Money Vikings out and ask them, what have you guys actually done? Because I don't think you're doing that well. I think we are whooping your booty.
Tell us on your show this Sunday. We know you record on Sundays.
We know you listen to us. Come on now, you're those guys from Switzerland.
We know where you live. Wait, no, we don't. But West Coast, but yeah.
Yeah, I just wanted to give you guys an update. We are in that friendly competition rivalry. It's a lot of fun. We like talking trash, and yes, we feel like we are winning. We don't know for sure, but we haven't heard anything from them.
I want to know.
And we've sent multiple bragging chats about how well we're doing. So we'll keep you updated as we know. Guys. Right now, Chinchilla Pickens doing it good. Heading out of the park like always. 5% a week is the goal. Brandon, take it over.
So I wanted to talk a little bit about the infrastructure bill. It passed an important milestone yesterday. It's going into consideration and for a final vote, most likely tomorrow morning, maybe Wednesday, but most likely tomorrow morning. The largest item in this bill is actually infrastructure, surprisingly. This is $110 billion for roads, bridges, tunnels, and other major projects. Okay, $66 billion would also go to passenger and freight rail, $39 billion for public transit, $25 billion to airports, and $17 billion to ports and waterways. Water infrastructure gets $55 billion. They will aim this at replacing lead pipes, improving filtration systems, and cleaning up drinking water. The bill includes $7.5 billion for electric vehicles. This includes $2.5 billion for charging, and, that's not that much money, but for this industry, it's meaningful, and that's what we were just talking about, BLNK. BLNK is the ticker symbol on that. I think it's a good play. I think they should actually get a decent amount of money for it. Now, Dave mentioned that they've had a run-up, so you may want to stay away from it right now until it comes back down. But it should show up in their profit and loss and their income statement and all that at some point. It is reported that 20% of the nation's highways and major roads are in poor condition and are 45,000 bridges, according to the White House. So there's a lot of money that's going to be going towards the construction, the fixing of these roads and bridges and things like that. The bill is going to provide a $65 billion investment into improving the nation's broadband infrastructure. So you can maybe make a play on AT&T or Comcast. Those are companies that should benefit from this. They're also going to invest $17 billion in port infrastructure, $25 billion in airports to address repair and maintenance backlogs, reduce congestion and emissions near ports and airports, and they want to promote electrification and other environmentally friendly technologies. 3 Senate Republicans also are pushing to add another $50 billion to defense projects into the infrastructure bill. So, maybe look at Lockheed Martin or Raytheon. They should be beneficiaries of that as well. But for me, not looking at companies that are specific to each and every one of these aspects, I want to look at a company that will benefit from all of these things, and that's Jacobs Engineering. Now, if you want to go to safe play, you could do the iShares Infrastructure ETF. That's IFRA. But my best individual stock for this, in my opinion, is Jacobs Engineering. They are hired by clients before the project begins for consultation and design. So they're not out there buying out the raw materials and things like that. They're not on the hook for those costs. They get hired as project architects. And I think that's important, right? Because they get their money from water, from electrification, from electricity, all of the above. In their recent earnings report, they did miss a little bit on revenue, but it wasn't that big of a deal. My favorite thing about it was earnings per share were up 30.16% over the past year to $1.64, which beat the estimate of $1.53. Revenue expectation was $23.42 billion. The actual revenue came in at $23.19.
So this company's doing $24 billion in revenue?
Yes.
Just off of, consulting?
Yes.
We are in the wrong business.
I know.
We need to be consultants. Can I consult you on that consulting?
Now,
goodness me.
I just listened to their earnings report over the weekend, to the earnings call, and he said that the CEO said the infrastructure bill will be a significant benefit to Jacobs' profit and loss reports for 22 and beyond.
And beyond.
Yeah.
Wow.
Yeah. Also, they
even called it out in there. So it is a good play then. It is a good call.
I think so. Jacobs, they also raised their FY21 adjusted EPS guidance from $6. They were looking for a range of $6 to $6.30. They upped it to $6.15 to $6.35. So that's the new range they're looking at there. They've consistently ranked number one on both Engineering News Records top 500 design firms and also Trenchless Technologies top 50 trenchless engineering firms.
Nice.
Highly regarded. In April of 2021, the Institute on Taxation and Economic Policy listed the top 55 corporations that paid $0 in taxes for the year 2020. Jacobs' federal income taxes for that year were negative $37 million for an effective tax rate of negative 17.4%. Now, this report that I read was reporting that as negative. For our sake, this is positive. As an investor, you're looking at this and you're saying, that's pretty good for me.
That is good. And the fact that they pay negative taxes, I get the name of their tax attorney.
I know, right?
Wow.
So that's what I'm saying. I think the safest play here is IFRA, but the best individual stock is Jacobs Engineering. In this market environment, I actually like individual stocks over ETFs because I think that a lot of the market is overvalued, but you can find pockets of good value to buy. And that's this is a stock picker situation right now where I think individual stock pickers are actually going to outperform the ETFs.
From what I heard, I can safely assume that this company isn't everything in the United States as far as building and construction. They're in some way, shape, or form because they have almost the same amount of revenue as IKEA does globally.
Yeah.
I mean, come on. Come on. This is a monster company here, guys.
I lost you on video. Hold on. Oh, I got you. You're back.
You don't need to see me. No one wants to see this. Come on. Seriously.
Yeah, so I like Jacobs. I also think that the COVID, this Delta variant, I don't think that this is priced into the market right now, generally speaking. We've seen some pullbacks on travel plays and reopening plays. Marriott, the hotels, things like that have dropped a little bit, but the overall market's still sitting at close to all-time highs. And I do think that we're due for a COVID scare. And I think you buy that dip.
Agree and disagree. And here's why. If there is a 5 to 10%, quick drop, then yes, you do want to be buying in on that dip. You want to find the value companies. But do I believe the Delta variant is priced in? I firmly believe that I always want to be apolitical, but given our political environment that we're in now, we're not going to have another lockdown shutdown like we had before.
I don't think so either.
And so I can't see us having the same ramifications economically and stock-wise as we did before.
No, but I do think that
we can always have a correction for a lot of different reasons as well, too, and I would be looking to buy on those.
So we've already seen oil drop in the past couple of days, and I think that's actually good for airlines. Delta, for example, or United Airlines. Those are my two favorite airlines right now. And I think that, if you get I think that you should pack in Delta into your portfolio as long as it's under $40. Over the long term, I think that's going to be fine. But if you see a day where the Dow drops, 700 to 1,000 points or something like that, then I think you go stock picking. Because I don't think that we're going to shut down. I think those fears, if they happen, they're going to be overblown. And this oil drop is great for airlines. At the beginning of this summer, I sat here and thought that oil was going to go up, and it did a little bit. I mean, you both talked about this, but I thought it was going to be higher than where it is right now. And here we are in the midst of a travel season in September, right before the summer ends, where a lot of people are driving still, even with this COVID variant, and oil did not go as high as I thought it would, which is one of the reasons why I turned into being a bull on airlines, because the price of oil right now is not holding them back.
It's not, no, and then they're raising prices rapidly. If the same ticket that you would have bought 6 months ago versus now has gone up in price, maybe 2-3 fold. So it's they're making their money back slowly.
Yep. So I think you just continue to add this on drops, and as long as it's under $40, I think you keep buying. In my opinion, it may drop lower. It may have a steep scare because of this COVID.
Delta Airlines, right?
Yeah, or United even, but Delta's my favorite out of the two. But they're both close. But it may have a steep drop, but I think you hold your nose and you keep adding to it, and then I think you're going to have a $47 stock at the end of this easily, in my opinion. But I don't think that COVID Delta variant is necessarily priced in completely yet. That's why I think we're going to have a drop. They've said that the Delta variant of this is as contagious as chickenpox. I now know more people that have COVID currently than I did during the first run. And one of them was vaccinated prior to getting it. So,
see, I don't know anyone that has COVID currently.
Really?
Yeah.
I mean, maybe it's just me.
But the first time around.
I mean, I don't. They said I don't want to be operating on a fallacy of my own personal, perspective versus the whole of what's going on.
Yeah.
No. But I did hear it's as contagious as the chickenpox, and that does worry me a little bit. I don't think we're going to shut down over it. But like I said, with markets hovering where they're at right now, I think that we could have a dip.
The reason why I'm cautiously optimistic when it comes to the Delta variant is because what happened to the UK is that it hit hard, and then it also got back to the other side of it very quickly.
Yeah.
And it was a quick hit and done, just a number of weeks, and it was over with. It wasn't months.
Right.
So I'm not including it in my investing. How about that?
I'm not. It's not that I'm not optimistic. It's that I think that there's going to be a market drop because of it in the next week or two. And I think we'll come out just fine at the other end of it. So buy that dip, right? But we'll see. We'll see what happens.
Okay.
That's all I've got to talk about today. We're sitting at 35 minutes right now.
We don't need to talk for hours and hours and hours and just, give people lots of insights and knowledge. Some people want to get on their lives, Brandon. Come on now. Final thoughts. I'm going to go with my final thoughts is, guys, we both agree BLNK charging is a good one, but we both agree that it just took a nice little jump up right today. So wait for a little pullback, wait for an opportunity to get in and maybe get in, put some money in, maybe for a long-term investment, maybe just for a short-term day trade. Like I said, look for those opportunities.
Yeah.
I went over what I was looking for on day trades. I covered what I needed to cover there. I'm now no longer a bear. I'm crossing back over into bull territory here, guys. So I'm happy about that. And maybe we can go ahead and become a full-fledged bull again, because that's what I like being. So that's
I like bowls too.
Right? Yeah. So I don't have any calls.
That came out way wrong. Okay, go ahead. Yeah, sorry.
I don't have any calls this week. Besides, keep an eye on BLNK, and then if I see anything that's like 100% confident on, I'll post it to Instagram. Follow us on Instagram at Chinchilla Pickin',
and on StockTwits,
and generally everywhere else. We're eventually going to get everywhere. Eventually, just give us a little bit of time, guys. And I know a lot of people have been sending in subscriptions for the emails. We're working on it. We had a little technical issue with our website. GoDaddy wasn't, we're doing the best we can with it. What can we say?
Did we mention? You mention the website chinchillapicking.com?
Yep.
Okay.
I'm not an IT-ologist, so I can't get in there and fix it with. I don't do. I'll write all that code, ones and zeros. We have someone else who does that, and we're working with them. So his name's Brandon, right? Brandon. Final thoughts, Brandon. Anything?
We often hold positions in the stocks we talk about on this show. We are not licensed financial professionals, but we are here for your education and entertainment because we want everyone to make money, except for the Money Vikings.
Did you just steal the end of the line?
I did.
Nice. Come at us, Money Vikings. You guys have a good night. See you next week.
Have a good night.